All right, let's move on to another fun and exciting area. Welcome to what? Earnings per share, EPS. Now, what is earnings per share? Earnings per share is one of the most talked about numbers in the financial statements. Creditors want to know about it. Investors want to know about it. Basically, they're saying, hey, I need this information. It is information that is required to be disclosed on the face of the income statement for publicly held companies. We'll expand on that in a minute. But what is earnings per share? A lot of people think earnings per share is how much money I'm going to get as a dividend. No. It's calculated the same way each year so you can compare one year to the next year to the next year. So we have to calculate it in a way that is consistent from year to year to year. What earnings per share means, it is theoretically how much each shareholder would get if the company paid out all of its income in the form of a dividend. It's not how much you're really going to get, but if the company were to pay out all of its income, if it distributed all of its income, how much would you as a common shareholder earn per share? That's why it's called earnings per share. That would be earnings per share of common stock. Now, where do we disclose it? It says it is required to present information for basic and diluted on the face of the income statement. Now remember my income statement, and we're going to cover this in detail in another section. I like to go surfing on the Titan OC. Operating, non-operating taxes gives you income from continuing operations because you expect that to happen every year. Then you've got discontinued or disposal and extraordinary, and then you have net income. You are required to show it on the face of the income statement, income from continuing and net income. You also need to show either on the face or in the footnotes for the D and the E. So these two you're going to show in the face or the footnotes, but on the face you have to show these two. You don't have to show earnings per share for comprehensive income. You don't have to show it for earnings for cash flows and blah, 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 but you do need to show it for this. So that's where you're going to show it on the face of the income statement. And we're going to show it for two things. The two terms are called basic and diluted. Basic and diluted. Basic is known as your simple capital structure. It's called basic or simple. It basically says there's no potentially dilutive securities. There's real basic. There's nothing that could be converted into common stock. What kind of things can be converted into common stock? Options, rights, and warrants. Get stock option, converted to common stock. Convertible, preferred, convertible bonds. Those could be converted into common stock. Those are potentially dilutive. So simple says those are simple, they're not there. Complex or diluted is called a complex, right? This is simple, right? Kind of like my ex-girlfriend. Very simple. This is complex, kind of like my wife. Very complex. Now, what does that mean? It means that this says there are potentially dilutive securities, and this is anyone who could convert. So the assumption here is anyone who could convert does so. It doesn't even matter if they really do convert, because this is a theoretical number only. In other words, could they convert? Yes, they could. Doesn't matter if they did. Could they? Yes. And would everyone's earnings per share go down if they did? Yes. That means it's dilutive. It dilutes earnings per share. In other words, earnings per share should get less and less and less. That means someone's giving up less and getting more. Everybody gets less. That's called diluting earnings per share. So when we talk about is it dilutive, that means it's everyone, like you're making orange juice in the morning, right? I grew up and we used to buy frozen orange juice. So you open it up, throw it in the container. If you add too much water, it gets too weak, right? It dilutes it. So that's what we mean by dilutive. Is it diluting? Is it breaking it down? So we're talking about the different capital structures. We have a basic capital structure that consists of common stock and nothing else potentially dilutive. We have a complex capital structure called diluted, and that is common stock and anything that could potentially be converted into common stock. So that's what we're looking at as far as diluted or fully diluted.